So, hey everyone, welcome back to the Blueberry Funded Monthly Updates podcast. This is episode 2, and I'm your host, Chelsea Guerrero. As always, I'm joined by the general manager of Blueberry Funded, Marcus Fetherston. Hi, Marcus. Great to have you back on. How have you been since our last episode?
Hi, Chelsea. It's good to be on again. Very busy, very busy. It's been a pretty
Mhm.
epic 1 to 2 months for us. I feel like we almost like missed the last month's AMA for this because we've just had
Right.
so much on. But really excited to be back. The response to the first episode was really good. So yeah, I'm really excited to dive into what we've been working on, what we did
Mhm.
last month, and what's to come in the future as well.
Absolutely. Same here. We had some really great feedback from the last episode, and even more questions coming in from our community, which is awesome. So there's definitely a lot of interest in what's going on behind the scenes. But before we jump into the trader questions and firm updates for this month, I just want to say how cool it's been to really see the momentum building around Blueberry Funded. Even in just the past few weeks, there's a lot happening, right?
It's definitely like the growth and engagement we're seeing from traders has just skyrocketed over the
Hmm.
last month or two, and it's kind of it's a good problem to have, as I keep saying, or it's not a problem, but it's every time we think we've got a bit of breathing room, let's build some new things, let's scale a few processes, and that the demand just goes up again. And I think it stands testament to that desire people have for a solid broker-backed prop firm,
Yeah.
sustainability, and just knowing that their capital and their trading is safe over the long term with a trusted provider. So we're always playing a constant game of catch up to meet that demand, whilst also working on new things to improve the prop firm, the trader experience, and just the prop space in general. I think it can sort of stagnate a bit, and really, the main product is always there. Being the challenges, and the funding side of things. But I think it's really great to keep building new things, to keep things fresh, or give new opportunities to traders and new asset classes and sort of new ways to utilize their trading in a prop firm.
Mhm. Right. Yes, I agree. And all of that is absolutely amazing. So, we've got some key updates to cover and a few hot topics that traders have been asking about. So, I think it's time to kick things off with some monthly updates. So, this month has been a big month so far, and the last couple months as well. Can you share a little bit about what's been happening?
Definitely. So as I was saying before, look, the growth has been very huge
Mhm.
over the last 1 to 2 months. It's really good to see us sort of getting into the top 5 firms by website traffic, as posted on Prop Firm Match last month. So that was a huge win for us. But as I said, with more growth, more scaling comes more problems and things that we need
Mhm.
to improve and scale in order to meet traders' demands and continue delivering the experience that people are joining us for. Um, but that has been a really good thing that's happened. But the main thing I think we've done is when we had a bit of breathing room back in April and May, we really ran a lot of surveys to our Discord community, on social media,
Mhm.
and to our traders. It was really good. We had over 1,000 responses to it, and we really sort of
Wow.
used that to build our roadmap for the next 2 to 3 months. I'm really big on being a client advocate and sort of seeing what traders are actually after, and we'll build to that. It's sort of the best thing about the prop space. It's like, oh, what do we do in order to drive the client experience? Instead of having 50 internal project management meetings, you put out a
Yeah.
survey and your users build the roadmap for you. So everyone wins because they're
Mhm.
doing your work to an extent, and you're giving them what they're after. So we did a really great client survey, as I was saying, and based on the results of that, we essentially went straight into it to deliver the top 3 requests that we had from traders. So the number one, we removed the margin rule.
Yes.
And not something that we did lightly. I think it's something that was the most requested thing in Discord as well. And it's kind of tough running a prop firm because as much as it's about being a client advocate and delivering what clients want, it's about doing it in a sustainable way as well. That's really protecting their capital over the long term, as we've seen in this industry. People come in, chop and change offerings to drive short-term sales. It's not a sustainable change, and the
Mhm.
firm blows up in the long term, or they then have to reverse rules and make it even stricter, and no one wins from that. So look, it's something that it was our most requested change across the board. We did quite a lot of data modeling research into it to swap it out with a fixed lot size rule in order to sort of meet that demand from clients. And so we've done that about 3 weeks ago now, and the feedback's been quite strong, but we're further developing that rule as well. That's the thing about fixed lot size rule. It makes it a bit simpler to understand for people. They don't have to go in and calculate all these different margins. It's right there. But that being said, we did launch that a bit conservatively, but that now gives us the ability to continue analyzing the data against those fixed lot sizes and then make changes as we go. So, and because there's been more requests for that from traders in the Discord as well, and for any of those watching
Hmm.
right now, we do listen to that feedback. I know it looks like I always say I'll take a look into it and get back to you, but I
Hmm.
really mean that because we take all that feedback and we're going to the risk team. We'll talk about, hey, we've gotten a lot of requests to change on it, the gold fixed lot size or this one crypto pair or something. What does the data look like on that? If we change it, if we increase it, what's the safe tolerance to increase it to based on all of our trade history from traders, and then adding some implied volatility to the markets on top of that. So um, very mindful of trader feedback, but we do it in a way that is still based on the data and what's going to be best for the firm and for the
Hmm.
traders long term as well. And yeah, really excited to have delivered that. The next thing that we delivered as well, which has been a long time coming, people always ask us, you're a broker and a prop firm. Why can't I take my prop firm money and put it
Right.
in the brokerage? So we're very excited to launch our brokerage payouts to Blueberry Markets, the brokerage arm of the business. So we launched that a few weeks back. We've already had a few traders take advantage of that, which is great because ultimately, if you've got a successful strategy that's giving you payouts on Blueberry funded, and you want to keep trading and have the flexibility of using your own money, it would make sense to continue trading on the conditions that strategy's been working on, which is a
Hmm.
Blueberry. So now traders have the ability when they request a payout, if they already have a Blueberry account, they can transfer the money into that, and we give them a deposit bonus as well, or a credit on top of that as well to further
Hmm.
give them some flexibility in their trading. So it's great to see some uptake on that and really sort of build out our ecosystem, which is really what we're trying to do here over the long term. We're really just getting started with that. It's very valuable to traders that Blueberry Funded is backed by a broker and one that is quite large, prolific, is regulated, and has top class trading conditions and infrastructure, because it's something where we can build an economy of scale across multiple brands
Hmm.
to give benefits that some prop firms out there can't deliver, and some brokers out there can't deliver because they don't have a prop firm attached to what they do.
Yeah.
So again, that's the first in a long journey of a lot of cross branding and a lot of ideas we have to join up the brands more and extend into new brands as well in the Blueberry Group, which we're very excited for. The third most common request that we implemented was our synthetic indices challenges. So we're the
Hmm.
first broker back firm in the industry to release those. Definitely a big step forward. Synthetics, across the industry have had major growth in the last few years. It's something, I've seen that demand come from the traders on, and a lot of requests for it. And we've been really excited to launch that and you build these really proficient, technical, algorithmically driven products for people to really test their skills when it comes to technical analysis and things like that. So we've launched that. The response has been good so far. We've been making real-time updates to the product as people have requested it. Again, it's very new territory for ourselves and for this industry. So it's one that when people give us feedback, we take it on very quickly. We've already made a lot of changes to the spreads on synthetics based on feedback. We're looking to potentially tweak some of the drawdown settings going forward as well, and have some new platforms available as well. Because being an instrument very driven by technical analysis, having trading view platforms or advanced charting platforms is going to be really important. So those are a few of the next requests that have come for our synthetic challenges. So anyone watching who submitted those in Discord, we are looking into them and we're really excited to bring those to market. But yeah, so they're essentially our three big updates that we did in line with the client survey and what everyone has been requesting. But we've also been sort of moving into a lot of new promotions as well. We did our first physical event, which is a trading contest in India with some of our
Hmm.
large partners from the region. We've been releasing a lot of content on that on socials, and the feedback's been really good on that. But that's something we're really excited to do as well over time, is a lot more local events. I mean, we're in such a global but online remote kind of industry, which is really fun.
Yeah.
But sometimes it's good just to sit down with people in person, get to know them, talk about the brand and sort of better understand their needs as traders. And yeah, it really adds a human element to this that we want to do a lot more of in the future in some of
Hmm.
our key countries. So traders, stay tuned for that. I'm really excited to update on
Yeah.
some new events we're looking to do.
Yeah, that is amazing. And I was just going to ask, so is India one of your bigger clientels as far as like Blueberry? Is that kind of the demographic that does trade? A lot of your traders come from India. I think that's amazing that you did. an event out in India. I think, like you were saying, just more local events at different places to really show that Blueberry is a global, program platform. It's amazing.
Yeah, look, India. I've said this in other interviews before. It's one of our biggest regions, and it's a great
Hmm.
success story. I mean, I've always known it's such a vibrant region for traders that keeps growing. I feel like the
Hmm.
space there and the local trading groups, content creators has
Hmm.
skyrocketed over the last few years. But when we started Blueberry Funded, it was very interesting because as much as I've known it's a very vibrant space in prop firms and brokers I've worked at in the past, they've never had a lot of interaction or a lot of local partners in the region. But it was interesting when we were doing our pre-launch back last year in August. I thought it was interesting because I'd look at the traffic data and I'm like, why is India like a number one country? We've done no
Yeah.
promotion there. We didn't do any ads, didn't serve anything there. And ever since, it's been so great to us. And there's so much. It's just a really good vibe, I guess. A lot of really great partners,
Hmm.
affiliates, and it's growing and becoming such a booming region for trading and forex, where people really love it and bring a
Yeah.
lot of new perspectives to the space. So,
Hmm.
look, we service quite a lot of regions, but
Hmm.
India's has definitely been a really fun one to be a part of over the last 9 months, and we're only going to continue doing a lot more there.
Yeah, yeah, that's nice. I see the support that Blueberry has from that region, and it's really amazing. So I absolutely agree. And I think the growth really just has been so impressive, especially considering that Blueberry Funded has only been live, just over 9 months, and you've already introduced five different types of challenges and being one of the first prop firms to introduce payouts to a regulated broker, Blueberry Markets. And in fact, from what I've seen, the last couple of months have been just full of many, many launches.
Yeah, I mean, April laid the foundation, and I think May was the month where we were able to really give a lot back to traders,
Hmm.
and I think the industry as well, because we want to do things that other people aren't doing or things traders have asked for that no one else will action, and we're really only just getting started, as I keep saying. I mean, I've got uh, like so many ideas over the last few years. I think that were held back at previous uh, brokers, companies I was at, listening sort of trader feedback and just sort of building up this like war chest of ideas that we're now releasing. And these are the first few, but we have a lot more to go. As I said, like these are the simple but obvious ones because they're the most requested
Hmm.
from traders as well. And it's kind of good because these are projects I've really wanted to do myself. I'm like broker payouts, synthetics. They're things that I've been wanting to do for a long time. And coincidentally, they were the top things requested from traders, which are um, I like because it's kind of like we're thinking along the same lines,
Hmm.
which I love sort of in a community element. Because in a lot of industries, a lot of businesses, the traders, the clients, the communities, and the business are always very separate in a lot of ways. But I really love that a lot of what we want to work on is also what our traders want as well. And the survey confirmed that. So that alignment is yeah, really exciting for me. And yeah, we're really just getting started. We have a lot more projects coming. Probably in July. And from then on, when it comes to new asset classes, new trading platforms,
Hmm.
and really new brands as well, which I guess we'll speak a bit more on in the AMA side of this. But really exciting times ahead, and we're really thankful for all the traders that have supported us up to this point in time, and looking to give more back to them and to new traders that come on board now as well.
Yeah, I definitely agree. So, with the coming months coming up, are you launching futures? What's where are you going with futures? Blueberry futures.
Yes, so Blueberry Future is probably our next big release that we're looking to launch. I don't want to commit to the hard date just yet because I have a really
Hmm.
bad habit of doing that and it's always wrong, or we need to, fine
Right.
tune things a bit
Hmm.
more or something, or we really want to sort of nail the pre-launch campaign ahead of time. But really within the next month, we're really looking to dive into the future space, which I'm really excited for because one of our highest countries by traffic on Blueberry Funded is the United States, and we don't service that for compliance reasons when it comes to
Hmm.
CFDs, and a variety of other reasons as well. But there's a lot of passion there. I mean, obviously, a lot of the prop industry, futures industry, is coming from the United States. You're from the United States as well, so we have a
Yeah.
lot of like great partners and people based over there as well. Very keen to get on board with their products, and we really don't have a solution for them. But futures has been growing massively. Like it's really own world when it comes to trading, own community. It works very differently to CFDs, and that's something we want to give a great offering to. So that's coming out really within the next the next month or so. We've started the socials. The Discord is live. There's a waiting page on the website if people want to sign up for pre-launch offers and more updates at blueberryfutures.com. So lots of things in the works, and we're really excited to go to market with something that will be broker backed as well, offer
Mhm.
new trading platforms and some competitive prices and something a bit different when it comes to the evaluations as well. So we're trying to tick a few boxes with that I think traders will be very excited for, and there'll be more updates to come online for those that are interested.
Perfect. Yeah, that's something I'm super excited for, and I'm looking forward to. I actually think it's a really strong move, for Blueberry to expand into the future space. It shows that you're really evolving and paying attention to where serious traders are heading, and so seeing Blueberry step into that arena for me is super exciting. And I feel like futures can demand a little bit more discipline, clear risk management, and really needs a real infrastructure to really back it up. So I think if Blueberry can really roll out with transparency for their traders, really strong execution on futures, and proper educational support, it could really be a game changer, in my opinion. And I'm super optimistic to see how you support the traders through this transition. Like at the end of the day, I feel like this space needs more platforms for traders that take it seriously, right? And I truly believe that if Blueberry can deliver that through futures, it's going to definitely be a game changer. So again, super
Yeah,
excited for that. Yeah.
it's one that we've held off on doing for a while. I mean, it's interesting because futures has become increasingly more popular over the last year. And I think it's one where a lot of CFD prop firms have just jumped in as another source of revenue for themselves. People say, oh, the profit margin's way better. Everyone's diving into futures. And I've always
Mhm.
been on the sidelines thinking, well, is this just what the CFD prop space was 2 years ago? And the profit margin's great because there's less
Mhm.
competitors and that race to the bottom hasn't happened yet. And then, yeah, as it sort of unfolded. A lot of CFD props have started their futures props. It has become a bit of that continued race to the bottom
Yeah.
of them just continually cutting prices, adding things, and a lot of things in my mind that don't actually make sense product wise. And so with us, it's always been a tough call because we don't want to just dive in. It's not a cash grab for us. Obviously when we build brands under Blueberry, Blueberry's been around as a brokerage for close to 10 years now. And
Mhm.
we've built Blueberry Funded as a sustainable prop firm that's going to be here for 10 plus years into the future. So when we start something, we want to do it seriously in a way that is properly broker backed, is sustainable, and isn't just a short-term cash grab or something to just bring more revenue into the business because it's there. We want to do this properly, which is why it's taken us a bit longer than some other CFD prop firms. But I
Mhm.
think the extra time will be worth it to do something that is a bit different and a lot more sustainable. But again, more updates to come on that. I'm really keen to lock in our hard launch date on our side and start being able to reveal to traders platforms we're using, the challenge parameters, pricing, and all of that. So definitely a big project that we put a lot of work into that we're very excited to get live.
Yes, I'm super excited to see it, and I'm sure that all our traders in the U.S. are super excited and patiently waiting for it. So now let's move on to the fun part, our community Q&A. Our community had so many questions for you, but unfortunately we can't fit them all in this section, so I'm going to be choosing the best ones. We've got some really great questions for from our traders online. So, what would you say the biggest challenge your firm has faced, and how did you overcome it?
I would say scaling to keep up with demand because it's an interesting one where I think growth for us and for a lot of prop firms is it's not continual straight line growth month on month. It can kind of stagger in that you have
Mhm.
certain growth in your client base slowly, then a huge jump in 1 month, and the cycle repeats, which is it's hard to predict for in terms of scaling processes, staff. And resources and infrastructure in advance for that because you don't always have a predictive level of growth in the business. So for us, it's
Mhm.
always been about it's a fine line to sort of tread with that. So that's always been our biggest challenge because again, I've seen in the past, and this was actually something that I think went bad for a lot of prop firms a year or two ago, is they have a quick bit of success. And the thing is about this industry is risk is staggered as well. The risk that you see from a new jump in traders, whether it's changing payouts, people doing toxic trading or arbitrage or
Mhm.
things like that with you. That doesn't unfold for months after you get the initial sales from a new wave of traders. So what was very common in the prop space, they have quick success, they go out, hire a bunch more staff, really try to scale it, but they don't understand the cost base properly because that doesn't set in for a few months. So it's always a very
Mhm.
fine line balancing act in this industry, between having enough resources and enough scale and not enough. Because the worst thing you can do is just go hell for leather and go really hard, and then that's not sustainable because in a few months your cost base has changed. The level of growth that you had to sustain that level um, of staff and resources doesn't continue, because ultimately there are cycles in any business, especially in this industry as well, that are very unpredictable. Like, that's what I always tell people is, like, I think when you work in an industry that's entirely predicated on trading in the markets, your business is quite volatile as well.
Mhm.
Trading activity is based really on the market volatility that's out there. Traders obviously love volatility, and essentially trying to predict how your business is going to go, you kind of almost need to try and predict market volatility as well. And if you were great at predicting market volatility and market movements, you'd be a trader, not running a trading business. So
Right.
it's really a fine balancing act running this kind of business when it comes to scaling and trying to do things in advance, but not too much. So that's really been our biggest challenge. And you're trying to do all of that while also bringing new projects to market as well. I think a firm and its staff can spend all day just trying to catch up, put out fires, deal with things that are happening. I've worked in the CFD space for 9 years
Mhm.
now. Yeah, almost 9 years. And there's never been a quiet day, or there's never been 2 days that are the same. I feel like you always sort of have to be building new things at the same time as dealing with the chaos. I think something I always joke with. You talk to people that run development teams or building tech, and they're like, oh well, we'll
Mhm.
build this feature when once things have calmed down, then we'll have time to build this or do that. And I always say to people, it never calms down though. You always have to have almost two runways going of dealing with the chaos and building new things, or else you'll never get anything done or bring anything new to the industry or to traders. So that's really our biggest challenge, is trying to scale adequately, playing that balancing act, that fine line, efficiently, and also bringing new things to market, which is everything I think I talked about before,
Mhm.
the question. But yeah, it's it's chaotic, but definitely keeps life interesting working in this industry.
Yeah, definitely. It sounds chaotic. Can you explain how the new position stacking rule works in place of the margin rule?
Sure, definitely. And I think I should have talked about this before when it came to removing the margin rule. So not only
Mhm.
did we replace that with a fixed lot size rule, we also defined our martingale rule, because I think traders were finding it a bit ambiguous, or it didn't fit the traditional definition of martingale to some people, which is understandable. So we really separated it out, and our position stacking rule is really to ensure traders are limited to maintaining an appropriate risk distribution. So essentially, we only want people to have a maximum of 4 simultaneous positions per individual asset, and a maximum of 7 simultaneous positions across all assets. Um, so essentially, in doing that, we don't want people overloading the account. We don't want people essentially continue to open positions in a martingale like fashion as well.
Mhm.
So really, this works in tandem with our fixed lot size rule to make sure people aren't over leveraging the account. Very similar to the marginal, but it's a lot more palatable and understandable for a trader to say, here are the max lot sizes you can have. Here is the max number of positions and positions per asset you can have. I think it's much easier for someone to understand that, to get into the markets, activate their strategy, than trying to calculate a lot of different margin requirements before entering into a trade. I still encourage traders to calculate margin and have a good understanding
Mhm.
of margin requirements. I think that is vital for all traders. But yeah, having this position stacking rule, in tandem with fixed lot size and martingale, is what's going to stop traders from over leveraging, which,
Mhm.
based on the numerous accounts I've analyzed, both through data and manually over the years, over leveraging is like the prime cause of blowing up accounts. I always say, traders' worst enemy is themselves, and trying to continually drive into the market when you're not onto something good is going to give you the highest chance of blowing up and losing money in the short term and long term. So this rule is really trying to reinforce that and make sure traders are trading sustainably, which leads to their own simulated capital being sustained and the firm being sustained as well, so everyone can win. But that's kind of our reasoning and logic behind putting that new rule in.
Mhm. That's great. Are there any hidden consistency rules in Blueberry Funded or any rules at all? Hidden rules?
Um, I think when traders, we do have a lot of rules. We don't sugarcoat it. We're quite conservative. We believe in sound, risk managed, sustainable trading. Um, we got to start a counter on these AMAs, the amount of times that I say sustainable, but obviously
Yeah.
it's at the core of everything that we do. So it is very important to me. But I think we do have a lot of rules. They're all clearly stated in our legal documents, outline of evaluation, in our FAQs. We encourage traders to read them as much as they can before buying an evaluation or starting to trade so they really understand them. Look, I think that the term hidden rules is used a bit creatively by traders. They'll blow up an account because they've broken one of our trading style rules, and they'll say it's a hidden rule. And I always joke it's a hidden rule, but it's hidden in plain sight
Mhm.
because it's right there in our Q and A's. Sorry, in our FAQs and on our website. So really, it comes down to traders doing the research. And look, I know that the great thing, about prop firms is there's a level of gamification in it, which I think is good because it helps educate traders. It helps you stay within certain risk parameters, analyzing what you're doing in your dashboard. But with that level of gamification, I'd say the downside is some people want to buy the challenge, dive straight into the trading, which is great. I think it's really awesome. We live in an age where people are so passionate about trading, and there's this really massive online community around it.
Mhm.
But and as much as we're not going to complain about people buying challenges and wanting to dive into their trading, but it's something where I always say to people, take a step back. It's like in the same way you analyze a market, you're analyzing the charts, a strategy, you're backtesting a strategy. You got to analyze the rules on a prop challenge as well, and really make sure that that fits your strategy because it's as valuable as understanding the market that's going to fit your strategy is understanding the rules and parameters that are going to fit your strategy as well. So always
Mhm.
encourage people to read through that as much as possible. In terms of consistency rules, some of our challenges do have consistency. So the stock trading challenges and our synthetic challenges, they do have consistency rules in the funded stage. And again, something that we explain in our documentation and our FAQs online. So always encourage traders to read them. We don't hide them. They're there for people to understand them and be able to fit their strategy to that, or ensure that Blueberry Funded is the right prop firm for them. So um, yep, it's all there
Perfect.
online, and traders can access that on the website.
Perfect. Yeah, I think transparency is the best thing. Can you explain how Blueberry Funded to Blueberry Markets payout works?
Definitely. So when a trader is eligible for a payout, they will see the option to withdraw to a Blueberry Markets account.
Mhm.
Now, they do already need to be fully onboarded, KYC'd, and have a Blueberry account separately, which is an entirely separate process. For compliance reasons, it is a different entity. Obviously, regulated brokerage and prop firms, sit in very different camps, entity and legality wise. So traders have to go on board with an account with Blueberry. They might already have an account with Blueberry, then they can use that account number. And as long as we can verify that it's one and the same person, same email address, same name, same KYC address on both entities, within 1 to 2 business days, we would transfer that payout profit share into that Blueberry account with an added 10% deposit credit on top of that as well.
And is that 10% credit every time?
Yes, so that's on every payout that they do. They'll
Okay.
get a 10% credit. Now, that does have its own conditions to it with Blueberry, which traders can read about on their website in terms of how long that credit lasts. If you make a withdrawal from that Blueberry account, usually that is going to also take the credit out of the account as well,
Mhm.
just so they're aware of that. But yeah, that will apply on every payout they do from funded to Blueberry. It's not just the first one.
Okay. Yeah, that sounds a lot like it sounds like an easy, very smooth process. So, where can traders see the spreads on synthetic indices?
Well, if they have a synthetic challenge, I mean, we're currently only offering it on MT5. So in
Mhm.
MT5, you open the market watch, Control M, right click just anywhere there, click show all. All the symbols will show up. You can then, there's multiple ways you can see the spread. You can load a chart, activate the ask price, and look at it there. Or you can right click in the market watch, go to columns and select spread, and you'll be able to see it. But again, if you don't have an account just yet, we have some test spread accounts. They can go into the Discord and they can find, or they can jump on live chat on the website or go to the FAQs, and those spread test accounts are listed there with login details if someone wants to see them before purchasing a challenge.
Oh, okay, great, great. So pretty much that process to seeing the spreads for synthetics is pretty much the same you would for a regular, funded challenge, right? That's how you would check the spreads for CFDs.
Yeah, it's exactly the same.
Okay.
It's in the same platform and it works the same way.
Okay, great. So what makes Blueberry Funded different? Because, as you know, now prop firms are starting their own brokers. So what are your thoughts on that?
Yeah, and it's interesting because I know in the last episode and in a lot of podcasts, I've always talked about brokers starting prop firms because obviously that's what we did, and now we're seeing the
Mhm,
opposite, which is we're seeing a lot of prop firms start brokerages or acquire brokers, and I think it's an exciting time that that is happening because it's showing that the prop space is maturing to the point where a lot of large prop firms have the resources and the long-term strategy to start brokerages. So I think it's overall positive for the industry. But like I've said before, the other way, I've always said that a lot of brokers are starting prop firms, and they have a lot of they can fill a lot of gaps that prop firms don't have when it comes to infrastructure and compliance and a range of other things. But there's also things that prop firms are really good at that brokers aren't good at. When it comes to social media management, community management, working with influencers, different kind of affiliate deals and
mhm,
collaborations. I think prop firms are very strong with that. But then it goes the other way. If a prop firm's starting a broker, I think that they, as much as they're both trading businesses, it's the nuanced small things that make them massively different. And I think
mhm,
if prop firms moving into the broker space, the risk works completely different, the compliance side works completely different, and they're exposed to things they've never had to think about on the prop side. Obviously, prop firms aren't currently regulated, and doing ongoing compliance also limits the way you're able to market the product. And I know there's going to be a lot of sort of big wake up calls for prop firms that move into the broker space and think, oh, cool, I can run all of these Facebook ads. I can target these regions. I can do this. And I think they're going to sort of realize that they're a lot more limited. Even though they're bringing great marketing expertise into the broker space, they're limited in what they can do with it. So I
mhm,
think, in a way, um, and it also works very different as well in terms of how you acquire clients, and it's a different ballpark entirely. And I think the thing is with this, you got to take a step back and sort of realize how different it is because we've seen this with a lot of brokers moving into the prop space. You don't want to have too much hubris or anything and say, well, we run an amazing broker, we're going to run an amazing prop firm, it'll be easy. A lot of brokers have been burnt doing that, and I think we're going to see a lot of prop firms do that on the broker side as well because they're moving into completely new territory now.
mhm,
As a sort of shameless self-endorsement, I guess we're sort of
mhm,
the best of both worlds is obviously we've been a broker for 10 years. We know that game, inside and out, and are always learning and growing in that. The prop side of the business, again, wasn't just added or just tacked onto the brokerage side. Blueberry really invested time in getting people that have experience in the prop space to understand that nuanced difference. Myself included, I'm a bit hybrid in that sense because I've worked in the broker space and then dedicated to the prop space for a few years. So with us, we really aim to do the best of both worlds. We know what makes brokers really great. We know what makes prop firms great. So whether you're trading with the brokerage or the prop firm, we aim to bring the best of both worlds to it. And that's mostly applied to the prop firm so far, but I think a lot of the things that we've done well in Blueberry Funded, through things like the broker payouts, are allowing people to pay out back to their Blueberry account. We're bringing to the broker side as well. So
mhm.
we keep on learning from both sides of the equation and introduced to the other. So there is a bit of a like a halo effect there. And moving into futures soon, I hope that's gonna spread as well, and we're gonna keep doing good things with it.
Yeah. So I know we talked a little bit about, futures earlier, and you kind of gave a rough estimate on, when futures prop should be launching. I know you don't have an exact date just yet, but the traders want to know, will that be backed by Blueberry Market? So can you talk a little bit about that?
Yes, definitely. I mean, most of the development of it is being done by the Blueberry funded team. Currently, we're bringing on some new people as well into it that have a bit more experience with futures or understand the market a bit more as well, obviously. But look, it's all part of the same Blueberry group of brands, the same upstream shareholders that are part of it. So in the same way Blueberry Funded's part of the Blueberry group, so will Blueberry Futures. So traders have that security and backing of knowing that it's supported. by this tier one regulated broker.
Hmm.
So yeah, again, like I said before, we didn't dive into this lightly. It's why we've taken a bit longer than some other prop firms out there.
Yeah.
We're not just looking for to dive in, have a new product in the stack. Like we've wanted to build this properly and build something that's going to scale, last, and be sustainable well into the future.
Right. So I'm also curious. So because you're looking at, backing uh, the futures prop firm by Blueberry Markets, how is that going to be a little different from uh, the compliance, right? Because there's a compliance with being able to have the Blueberry funded with, being backed by Blueberry Market. So I'm a little curious on how that would work for futures, being that futures is more so the US region.
Yes, definitely, and there's a lot we can talk to with that. So and it's part of the reason why we've delayed going in so much, because we've decided to seek a lot of independent legal advice on
Hmm.
how to launch a futures firm or the best way to do it. Because
Hmm.
look, whilst there's still no clear answers out there on regulation around futures props, some prop firm owners say that there is. It's really clear cut with a lot of regulators in the US, and that there's still a lot of unanswered questions, but there's certain frameworks that we can put the best efforts in to work within. So that's the thing that
Hmm.
really held us, not held us back, but really we wanted to get our ducks in a row perfectly and our house in order before we committed, and that involved us getting a lot of third party legal advice for this kind
Hmm.
of offering. So how we offer it might differ a bit from a lot of the other providers out there. But we believe, again, comes back to sustainability ultimately. So, whilst compliance for something like futures works very differently, very, very differently to a CFD brokerage, and
Hmm.
again, different from a CFD prop firm, it is something that we've gotten the advice on and something we want to do in a very compliant manner. So, that's sort of, in that sense, the backing from Blueberry or being part of the wider group um, works a bit differently, I'd say, to funded, because obviously works off CFD infrastructure, Blueberry funded to Blueberry, but this is different. Blueberry isn't a futures broker directly at this point in time,
Hmm.
but obviously has the investment connections and knowledge to make sure that we do this as legally and compliant as possible on the futures side.
Okay. Well, I'm excited. I'm excited to see how that turns out when Futures is launched. If you could give only one tip to pass a challenge account, what would it be?
There's so many. I would say patience. I mean, when I look at the data, I mean, patience. I know it sounds like such a common sense generic answer, but ironically, um, when trading can become very emotional, usually common sense can go out the window to an extent. So I always say to people just to be patient, like don't force trades or anything like that. And the data really shows that. People when they're passing challenges, even though we have 3 active trading days, it doesn't take them 3 trading days to pass a challenge. On average, it's taking people 10 or 11 from what we see in the data for phase one and phase two. So, yeah, it's not about going hard all at once. It's about spacing out your trading and being patient and, yeah, just not forcing it, I guess. But again, that's just one tip. It depends on what the data shows as well a lot of the time. And what we're finding exciting is the data does change based on the market. Month to month, it is very different. I think in our last discussion we were talking about low risk per trade swing trading, being the big thing that was winning payouts for people, and that's already changed. And I think we can delve into that in one of the follow up questions here. But yeah, I would always say patience, no matter what the strategy or what's working in the data. That's like a universality that traders should always be using.
Mhm. Now I want to kind of dial it back to the margin rule again, right? So I just want to say, like, removing the margin rule is really a bold move. So I want to know what's the rationale behind it, and how do you ensure the firm's long-term sustainability with this new approach?
Yes, and I think I talked about this a bit before, but really it's so the main reason we did it was because of client demand. It was a most requested feature across Discord, socials, our client survey, always being asked it. Ironically, as soon as we changed it, we then got a bunch of Discord suggestions asking us to change it back
Mhm.
because people preferred the old one. Because
Oh,
everyone
wow.
trades differently, but the majority of people always wanted us to get rid of the margin rule, which is understandable. So it came from
Mhm.
client demand. But again, it's a great question that this trader has asked. Um, because it's how do we do it in a way that ensures sustainability? Because ultimately, if we're just doing things because clients demand them, we're not necessarily. That doesn't always imply that it's a risk managed way of doing it. Like a lot of other firms, when they make things easier and just sort of cave to common requests, they're not thinking in a business sense. They're not thinking in a risk sense long term. We are, and that's why this was. It's been requested really since we started the firm, or it's been requested for 6+ months. So it wasn't a decision made lightly, and it wasn't just because of the demand. It was also because we did the analysis, we looked into the data, and again, that's why we didn't just replace it or get rid of it. We didn't replace it with something simple or completely get rid of it. What we've done is we said, okay, we're moving to a fixed lot size rule, which is very equivalent to the margin rule in a way. So the risk profile is not different. Um, but because the margin rule does take into account an entire accounts exposure, in order to take on that effect, that's when we did the position stacking rule. So in a way, the same risks that the margin rule sort of covered, we could say, we've replaced it with new rules that cover to a similar degree that risk, whilst making it a bit more flexible for traders and easier to understand. So it really sort of works for them, which is the reason why they wanted it removed. So it's one we would only do if it actually works for everyone and is risk adjusted and sustainable, which is exactly what we've done here.
Mm, that's great. Now, are you able to share the statistics of traders and their passing rates? So, for example, maybe a scalper or a day trader, swing trader, and their passing rate to the platform challenges?
I don't know that exact breakdown right now. I think we can, and we're
Mhm.
going to cover that, I think, in more episodes, because I think last time we were
Okay, great.
combining like all the stats, all the AMAs, and it went for like over an hour. And like as
Hmm.
much as I think a lot of traders did watch it start to finish, which I appreciate. I'm not going to ask
Hmm.
people to be tuning in for 1 2 hour lectures on trading stats
Hmm.
from me. I wouldn't want to put people through that, but we'll do a separate video maybe on the stats. But I would say, broadly speaking, in terms of the statistics of people who passed more and were paid out more. Like I was saying before, it's interesting the profile changed between April and May, because we've seen a long period of uh, low risk, low risk per trade traders. Um, Really being swing traders, and that is the profile that's passing more and being profitable more. Again, taking our payouts and our passes from May, we sort of saw something change up a bit. Still swing traders, but we were really seeing people that were coming in with a much higher risk per trade rate. Now, we don't always encourage or condone people taking more risk necessarily, but again, I think people were really responding to the market conditions, because as we saw April, a lot of volatility, especially in gold when it came to the tariffs. So I think people were really exercising less risk per trade, but trying to take a much bigger swing there. But what we've really found, I think, with a lot of that volatility, in my opinion, subsiding going into May is people still trying to get those swings, but risking more, because I don't think the movements that we were seeing on certain assets was as large as what we saw in April. So it's interesting to see, in my opinion, trader strategies really sort of um, work to fit the new market conditions. But in doing so, for people wanting to make the same amount of money, obviously they're taking more risk to do so if the swings aren't as big. Now, that's what we saw in May, like from successful payout traders. But again, taking on more risk to make that extra money, as it implies, is a much higher risk move than that. And that's something where, although people are making money from that, we're paying out on it. It all works with our rules. It's something I'd always say to traders is you don't always have to make the same amount of money every month or feel that pressure. Again, like I said before, it's about being patient. I think people think, well, I'm not getting the same moves this month as last month. So if I have less opportunities, I'm going to risk more on those opportunities, because my goal is to get 5 or 10% or something this month in my payout. But that
Hmm.
mentality, I mean, if you look at any major fund, any major investment scheme on earth, they're not getting the exact same return every month. You're going to have a month where you might make 5%, you might lose 2%, you might make 3%. And that's something where it comes down to, don't force the trade, or if the trade is there, don't increase the risk just so you can, take the same amount of money that you
Hmm.
did last month. And it's hard. I get it for traders, especially if you're a full time prop trader, because if you're a career trader, you might view it in a career sense as you're trading payouts your salary, and salaries are meant to be consistent. You get a paycheck every, 1 2 4 weeks, whatever it is. It's the same amount. And as much as I think people have aspirations of being a career trader, that doesn't mean that you should treat your payouts as a salary like a career worker does. Because if you think like that and you're like, well, I have to make this amount of money this month, it'll force you to maybe take trades you shouldn't. Or again, if you even have a consistent strategy, you'll risk more on those trades. And look, we did see that happen in May, that transition from April to May. And again, I'm only talking about the people that got the large payouts. I think something that we should look into, and I'll come back to everyone on, is, well, how many people doing that same thing actually blew their account and lost money? Because again, eventually, if you have a large enough pool of people, like if they're taking more risk, yep, they're going to get those higher payouts, but it doesn't tell the true story of how many other people failed in that pool of traders and how many were actually successful. So something for traders to be aware of, even though we see people taking more risk in May to get the payouts, and there was a lot of success with that. It may not be a universal thing, not
Mhm.
something we would condone or encourage, obviously, based on how we run the firm, but definitely something for traders to think about.
Yeah, and I do think that data is pretty accurate when it comes to like swing trading, especially in like the month of May and just in 2025 in general. Like for me myself, as I'm a trader myself, I find it this year's very difficult, and I know I've spoken to a lot of other traders as well that has dealt with the difficulty of trading through these types of market conditions because we don't know what to expect. So I think it's been, I think every month's just gonna kind of be up and down. You'll probably see the data and statistics is probably going to be changing every single month, just because we don't know what's going to happen. So I do think it comes down to being able to adjust as a trader and being very flexible, depending on market conditions. So yeah, I think that's very accurate. As you know how you're not diving too deep into the statistics right now, but I think overall as a whole, like just in general, it is very accurate.
100%. And yeah,
Hmm.
we'll definitely pull some more statistics. And again, I'm sharing a lot of that on my X, so people can follow that at Blueberry
Great.
Marcus on X. So yeah, I'm always sharing insights of things we're finding in the data
Hmm.
ongoing, so they don't have to sit through 1 hour podcast of me
Yeah.
ranting about them. We'll do that as well. We'll do that as well for like the
Mhm.
5 people out there who might want to listen. But yeah, we're sort of sharing a lot of stuff there as well. But we'll be pulling a lot more.
Mhm.
So which we do anyway to understand our traders from a business and risk standpoint. But I think it's good to feed that back to the traders so they improve their own trading, their own mindset, and things like that as well.
Yeah, that sounds great. So now I'm curious, Marcus, do you trade yourself?
I really don't get time to anymore. Sorry, I laugh. I always sort of joke about that I trade terribly, and I always joke it's like those who can't
Mhm.
trade forex deal forex, and that's how I've got
Mhm.
here today. But no, I have traded a lot in the past. Obviously, I think like the more I've delved into the business side of trading, like the business of trading has become my passion over the actual trading. But and
Mhm.
in that, I think when you work on like whether it's the brokerage side or the prop side, you still have to keep your eyes on the market. Obviously, more from like a business standpoint, what's the volatility, how's that going to impact the firm or the brokerage's exposure and that. So you always keep an eye on the market in a completely different way. But I feel like in doing that, it's like or from my mind, it teaches me more about trading from the analytical standpoint because as much as a
Mhm.
prop firm is sort of it's all about analyzing traders non-stop. There's a lot of data, you're looking into it manually. But before I was sort of in the prop space, my background is in risk liquidity management. So even before I was doing props, you're sitting there all day looking at data, doing analysis, modeling,
Mhm.
and looking at individual traders, analyzing their trading behavior. And it's kind of funny. I think a lot of people that work in the trading space don't trade because when all you're doing is looking at it from the business side. Ultimately, as we all know, the majority of traders fail over the long term. That's why the
Mhm.
rewards for the few people who are good at it, is so big. So I think a lot of people seeing it from the inside get a bit dismayed or dissuaded from trading by seeing that failure constantly put in their face. But that being said, it's a double-edged sword because in all your analysis or ways that you look at it, you sort of see the reasons why those few out there are really good and the kind of strategies that they employ. So again, it's tough because I think people get so cynical about trading working in trading businesses they forget about that connection to the markets, to traders, and what traders want.
Mhm.
Um, and I think that's honestly the reason why the prop space has been so successful because a lot of the original prop firms were started by traders or people running trading communities. And I think that's why when it came to marketing, fostering connection with their clients and that, I think that's why the prop space has been running circles around the broker space for so long because a
Mhm.
lot of people in the broker space, or most brokers out there, don't trade. You can sit in boardrooms of people where not a single person trades or has traded maybe ever or not in a very long time and they've lost that
Mhm.
connection. So and with me, even if I'm not trading, I'm always talking to traders, I'm always online, because understanding what traders are after is only going to make your business better. Like I said
Right.
before, it's very much what we've done with these recent updates. I'm not going to sit
Mhm.
in a room with a bunch of project managers, product managers, just talking about what traders want when you got a whole community there that you can take advantage of and they just build the roadmap for you so you can do less work, and get a better product that's going to make you more money and build a better client experience. And your clients get what they're after, and they're literally telling you to your face, "We want this." and we're willing to pay for it. Which is great. And to me, that seems like common sense. But ironically, in my experience, with a lot of brokers out there that aren't attuned to that, that is such a hard battle to be a client advocate for in those businesses. And that's why I think props are great. They've come in, they've listened to what clients want, and it's why brokers like Blueberry is so great, because they are actually one of those few brokers out there where people do trade, people do sit around talking about what people are
Hmm.
going to want, and survey their clients and really listen to it seriously. Again, much like trading, I said before, this seems like common sense in business, but you'd be surprised how uncommon it actually is a lot of the time. So,
Mm.
sorry, that went a bit off topic, but
No,
not trading right now.
right.
But yeah, I'd like to think I'm always keeping my eyes on the market from the business side.
Yeah,
But I still love trading in general, which is why I do
right.
what I do, and why we're continuing to keep building the brand and building and bringing new things to market for traders to
Mhm.
enjoy.
And I feel like you learn a lot, like with what everything you just said. I feel like you learn a lot on the back end, really just listening, because majority of the time you are listening to what traders really want. And so I also wanted to ask, do you feel that prop firm CEOs who are actually traders have more an advantage versus prop firm CEOs that aren't active traders?
Well, it is tough though, because there is another side to the equation, which is,
Mhm.
there's always that joke I think people talk about on X, which is like, if a firm's like tagline is, built by traders for traders, it's
Yes, I've heard
obviously it's
that.
going to blow up at some
Mhm.
point. And it's a commonly used tagline, even in the broker space a long time ago. That was always the thing. It's like, oh, we're good because we're built by traders, and there is a large degree of truth in that, because I think that's what made props great.
Mhm.
Originally was, I think, brokers obviously, as brokers grew, had to get more compliant, were bringing in more people from outside the industry, a lot of them strayed away from what makes people want to trade or why people are passionate about trading. And meanwhile, these online these discords, these communities, everyone talking on X, and a lot of content creators, they're the ones who their heart and soul is in trading. They're doing it day in, day out. And they're also running a community of people, talking to each other, not as like a business owner to clients, but just from like peer to peer or equal to equal. And I think in that, they had a lot of insight into what traders wanted and to build these prop firms and the
Mhm.
products and what they offered and the way that they operated. And like I said before, that's run circles around brokers in a lot of ways. But the downside of that is if you think too much like a trader, if that's all you're going to be is thinking like a customer, then the
Mhm.
reality of running a business doesn't set in. You have to be a risk manager, and trading risk and business risk are quite different in a lot of ways. I mean,
Mhm.
even broker and prop risk being nuanced is very different at the same time. So that was kind of the problem was, I mean, if I was running it purely as a trader, yeah, you would make the cheapest challenges. You'd make the
Mhm.
best, easiest challenges to pass, because what trader doesn't want that? But that's the problem is it's too much of a good thing. Like there's reasons that limits are there or in place, to make the firm sustainable. So it's a double-edged sword, because I think the thing that made a lot of prop firms very successful for a long time were ironically the thing that made them fail. So it's about having a balanced approach, I think,
Mhm.
and that's what we try to do here is be that best of both worlds. Like we have a lot of prop experience, experience online, building communities and things like that, within our team. But we also have 10 years of being a brokerage behind us too. So we know how to do things sustainably, not just dive in or race to the bottom or give in to, client demand instantly without thinking of the risks that might be attached to that. So
Mhm.
yeah, it's about having a balance, like everything. It's about having a balanced approach ultimately.
Mhm. Right. Thank you for your insights on that. I think that this was an awesome Q&A. And to wrap it up, I do just want to briefly talk about the future. We know the immediate future for Blueberry is futures, but what do you see beyond
So a lot of things. So other new asset classes that we're exploring, not just futures or synthetics or stocks, we're also looking to sort of branch out into some other ones, new trading platforms as well.
that?
Without giving away too much, Blueberry
Mhm.
just opted into or has launched a very popular trading platform for traders that we may be looking to sort of join in on in the near future, once we get a few of these other things out of the way. But yeah, and new plan types as well. So again, it's about adding new asset classes, new platforms, but also improving the things that we already offer as well. Like I said earlier, the synthetic challenges we're going to be making more changes to, some of the fixed lot sizes we're reviewing and looking at the data as well. So it's that balancing act of always looking at improving what we already have and building new things and bringing them to market as well. And there's a lot in the pipeline in both those areas that we're really excited for.
Great. Well, I loved the conversation today. That's a wrap on this episode. Marcus, thanks again for taking the time and sharing all these valuable insights.
Thanks, Chelsea. It's always a pleasure.
And to all of our traders and listeners, thanks for tuning in. Don't forget to follow Blueberry Funded for the latest updates, and we'll catch you in the next episode. Until then, happy trading.